Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 21st COT report of 2018. And as usual, we're going to start off with the changes in commercials positions. But before I go into the review, I'd like to remind you about two new services that we have out. One is called futurestradingguides.com and the other one is FX Trading Guides. Obviously, the first one is focusing on futures markets and the second one on forex markets. If you haven't yet checked these out, please do so. Give them a try. So let's start off with the sugar market, where we have a 27% change in commercials positions, a huge change over there. As you can see, 23 in large speculators, 21 in small speculators. So we can state that there were pretty decent change sizes, especially if you look at the past few months. There were relatively smaller changes in the market. Now that we have this increase in the market, suddenly we have a very large change in traders' positions, which can be considered as a bearish COT change signal, suggesting prices may actually move a bit downwards in the near future, meaning the first part of next week. Jumping to a 5-year chart, you can see that we are just moving away from this bullish COT Extreme, which basically means we have to be cautious, of course, with any bearish kind of trades here. So in the near term, we might see a bit of a reaction in the market towards this rally, but in the longer term, let's not forget about this very significant bullish extreme that was in the market for quite some time. Actually, you can see that even throughout 2017, but eventually prices could even go deeper. Now we had an even greater extreme, so we might see further increases in the market. Jumping to Mexican peso, where we have a 24% change in commercials positions. This is a bullish COT change signal, but as you can see on the market, price has already moved upwards, so maybe this signal is a little bit late for us. But jumping to the 5-year chart, you can see that we are actually at a relatively bullish extreme. I mean, considering the past, let's say, 1-year time frame, if we open that up to this 5-year chart, you can see that we are actually still far away from those all-time or close to all-time bullish COT extremes that are unquestionably large. So this means that if this trend continues in traders' positions, we shouldn't be surprised to see lower prices coming. Rough price is our next market with a 17% change over there in commercials positions. Again, a bullish COT change signal. Here we have a significant decline in the market, very dynamic decline. So of course, caution is advised. Volatility has increased. Jumping to a 5-year chart, you may see that we actually had this bearish COT extreme in the market, so we shouldn't be that surprised to see a decline in rough price, which means even though we have this bullish COT change signal, there's a huge chance that this trend will continue. Obviously, if you look at this 5-year chart back in 2015, we had this very large bullish COT extreme, possibly an all-time, which is just at this bottom in the market. You can see it's a great example of COT extreme signal. So currently we're very far away from those levels. We're actually much closer still to this bearish extreme, so caution is advised. Moving on to large speculator COT extreme, let's open gasoline, where we have this all-time COT extreme, not only in commercials but also in large speculators. So this is a bearish COT extreme, suggesting that this rally that we have in the market, this bullish trend that we have actually started back in early 2016, and basically we are expecting this to end based on, of course, this COT extreme signal that we see right now. Of course, keep in mind, I always tell you this in my COT reviews, that the COT all-time extremes, although seem to be very unique, they may be in the market increasing to even greater extent for many weeks or even months before the market reacts. So again, caution is advised here as well. Moving on to platinum, where we have a 620 report extreme in large speculators positions. 492 in commercials. You may see on this 5-year chart, we can't see how far back that was. It was many years ago, more than 10 in case of large speculators and almost 10 in case of commercial. So a huge extreme over there. This is of course a bullish COT extreme, and you can look at the market and see many great examples on how these bullish extremes can end or signal an end to a decline. So this is suggesting higher prices to come. And the last market for this review is going to be the Swiss franc, which we've been analyzing in the past couple of reviews. Basically, we have this bullish COT extreme, very large. It increased to even greater levels, as you may see in case of large speculators. You can also see that the market has started to move away from this this bottom. So who knows if this is going to be the end. There's a good chance it may be. If we look at the history of Swiss franc and the COT report, you may see plenty of examples when we had a bullish extreme in the market just before it started to go higher. So that was all for this COT review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.